Welcome back, chumps. I'm the Chump Change Trader, and this is the Small Accounts Challenge. Now, the last video I showed was pretty much a brief video of me pulling out of a particular position that was more leaning towards the upside. And if I had held that position, I would be kind of in a good spot right now. The other iron condor that I did have is now currently sort of sitting on the higher side of that range. And if I'm going to learn my lesson from sort of, not being too sort of scared to be able to test a certain side, I'm going to then employ a particularly new strategy of the same strategy that allows me to just kind of move as I go with the punches. So before we get into that, let's just take a quick look at what happened in the markets from the past week. Pretty much from the end of April up to the 1st of May, we climbed up to pretty much the same highs that we are approaching right now. Today is May 5th, Cinco de Mayo, 3:15. So we got 45 minutes left to go in the markets. And we are climbing pretty much close to those same highs that we received back at the beginning of May. Obviously, there was a lot that was happening in the beginning of the week, and the FOMC meeting pretty much took us to the lowest of the lows on that time period. I would say FOMC meeting was May 3rd. Then we climbed to our lowest lows, and then look at all of that recovery back into the week. So just a quick kind of reminder and update what had happened. We raised a quarter of basis point, and a lot of different companies had earnings. Some of them didn't have good some of them didn't beat expectations, and some of them, like Apple for today, had beat expectations. But overall, all of the future outlooks have sort of specifically stated that sales could be down for the next coming months/quarter. So that's something that you need to pay attention to when it comes to sort of this hopium that's being absorbed into the market. So I'm looking at this rally back as more of like an easy grind back to the levels prior to the earnings and prior to the FOMC meeting. But I don't see it as the fuel for a potential rally coming up. So all these blue lines that I have on my chart right here are the resistance levels that are coming, and one of the big ones, the key big one that I'm looking at right here, would be the 418 mark prior to, if I go back to a month, and then the one after that is 423. I think the 423 is the level that is going to be kind of the hardest one and the hardest nut to crack. So what I'm going to do is basically, in terms of a strategy, is actually start to build an iron condor, but piece by piece. So for example, we are approaching sort of the higher side of the current iron condor situation. And if I want to be a little bit more cautious and be a little mindful, what I'm going to do is watch the market. And if it continues to keep climbing, right, then what I'm going to do is I'm going to actually put in a call vertical as the start of my iron condor. So what does that mean? So let's look at, let's say, for example, the June 16th expiration. And you notice here that these little triangles have noted my current iron condor. What I'll do is I'll basically build the call side of my iron condor first, and this is selling a call vertical. And what does a profit curve look like in a call vertical? It's basically just, infinite, downside protection with a max profit target of 135. And so what I'm going to do is basically build out the call side of the iron condor first, and if we bounce back in the other direction, I can build out the put side if I so choose to. The buying power required will be 366 to start, but once I build out the put side legs of my iron condor, then I'll be able to then get this lower, and the other side of the iron condor will then add an equivalent credit of potentially 100-ish dollars. So it'll be the same kind of 200-ish dollars that I'll be receiving on a traditional iron condor, a 1 to 2 or almost a 1-to-1 ratio in that kind of realm. But the difference is that I'm efficiently capping off and selling the premium at the highest point that it could possibly be, once we sort of reach that level. So then I can comfortably say that when we ping pong and bounce back in the opposite direction, I don't have to worry as much in terms of the market swinging back in the other direction. If the this particular underlying is going to chop up and down like we are already seeing. So I don't foresee that that trend will change and that there's going to be a straight upward market. And I also don't think that there may be a straight downward movement. But simultaneously, if there's a straight downward movement, this strategy protects me in that regard because it'll stay 135 the whole way through going down. But simultaneously, I only have a bit of wiggle room from 415 all the way to 442 in terms of wiggle room to the upside. So the negative sort of notion of where this strategy may not work out is if there is a continuous movement to the upside. But then I can offset it with another put vertical, right, which will thus complete the iron condor and hopefully capture some of that lost revenue and be able to maybe skew the wings a little bit. But this is a particular strategy that I haven't really employed in person. But at the same token, it's a good time than ever to sort of give this a try, because then it'll at least quell sort of my idea of waiting for the right opportunity to sort of capture a market from a side-to-side standpoint if I'm able to do so now. So what I'll do is I'll go ahead and wait for sort of a consolidation in this rally that's happening currently right now. So let's switch it down to a 1-day period. So I'll close that real quick, switch it to a 1-day view, and you can see we pretty much hit a high right here, and it's bouncing back and then seeing if it's going to basically finish off on the end of the day in that same fashion. Typically, does that actually happen? Usually it doesn't. So being able to make my move now might be able to capture this particular momentum now and then allow me to benefit from a grind lower. But who knows what could happen. So we'll still be able to take the position off, if anything, because we have approximately $20 to the upside before we start to feel pressure about being tested. And and it's still roughly the same kind of profit to risk ratio that we would be normally employing. So let's go ahead and put that position back on. So let's do a 445, sell a 445, buy a 450. That'll be a 110 profit. Or we could do the 440 and 445 for a 130 profit. I'll keep it on the safer side. So 110. The buying power effect is almost 1 to 4, a little less. But once the iron condor is complete on the other side of it, it will basically lower itself, hopefully by little less than half. Send that through. And that should trigger very shortly. Let's see. Make sure I'm not stacking so I don't make similar mistakes as last time. I should be good. Alright, guess 110 is just a little bit too pricey for the market right now. I'll give up $1. Let's see if it triggers. Still nothing. All right. Here. Oh. Looks like that midpoint just changed, so we can go back to 110 and see if we can get that dollar back. Maybe perhaps as the markets is kind of making up his mind and the volume is sort of trying to recollect itself, it'll probably trigger a little later without having to give up too much money. So, but nevertheless, I'll be sticking with sort of these strike prices, whether we get the full 110 or give up a couple of dollars just so that we can satisfy and push the position out. I will keep you updated. All right. Have a good one.